If there was no sell button in Bitcoin, I would not be having this conversation with you, because at one point in 2013 and 2014, I was holding somewhere around 800 and 1,000 Bitcoin. So we're kind of like the Zapier of trading platforms or execution platforms. You connect all your accounts, you send the signal, we route that signal to whatever account you want. We are definitely seeing more and more people using environments like ChatGPT or Claude Code in order to set up their own strategies or write their own indicators, or even just pull in the pricing data directly from the CME and build an indicator on their own. Profitable strategy doesn't necessarily have to beat the market in a sense. You just have to be careful about risk management in using leverage. This is a really tough game to play. It doesn't matter if you're using automation or you're manually trading. You still have to survive the drawdowns long enough to stay in the game for all the upside and all the opportunity.
What's up, traders? Welcome back to the podcast. I've got Mike from the TradersPost. Mike, I appreciate you joining me today. You had me on your show, so now I get to return the favor, and I'm really looking forward to this. We're going back to, you said 2016 with your journey. I'm looking forward to hearing about that, hearing about how TradersPost is helping the retail traders in the prop space. As you said, this is a bit of a shock to you guys when you first found out what was available with the prop firms, but now it's blowing up. I think you said like up 40, 50%. So it's huge. And I think we need to kind of get this message out to as wide of an audience as we can. So I'm really looking forward to the conversation, Mike. Thanks for joining me.
Yeah, absolutely. And thanks for returning the favor. Loved having you on, and appreciate you joining our price action live show as well. It's always exciting to me to actually trade with other traders. This can be a very social thing. I'm just very careful, like, not to hear other people's signals, because you know how it is. You got your own approach and you want to dial that in. You and I actually had similar viewpoents the last time we traded together. So
I'm taking credit for the P&L that day too, bro. You had a really good trading session that day.
I set it up. 3 wins in a row.
Synergy was good. What's the co-host's name? Your partner?
Tom.
Tom was vibing with us, so the vibes were high. So I think that's what led to the winning day. But I'm very fascinated with automated trading because I come from Forex. We talked about that a little bit in our first convo. And in Forex, there's always been, and there always will be, someone telling you that there's a bot out there that'll make you 7,000% a day. It'll be automated. Right. It'll be the best thing ever. So like, I have a stigma towards automated trading. And maybe through the podcast today, you've already kind of done it, but maybe even more today, you'll break that stigma for me. And we'll show people that automated trading does not have to be some scammy looking bot. It can actually be even more focused on just streamlining your process. So we'll talk about that, I think, as we get going. But let's go back. I want to hear a little bit more about your story. I asked you before where the name TradersPost come from. I'd like to kind of get into that a little bit, but take me back to 2016, because you said specifically that's where this thing kind of gets going.
Yeah, a little bit earlier than that. Right around 2012, actually, I had sold one of my first companies. I started a little SEO company in the early 2000s. And most of my time has been spent in ad tech prior to getting involved in markets and, building a startup in markets as well. But around 2012, I had a little bit of money to work with. And I was like, well, I guess I got to do something with this. I don't really have a huge retirement account. We didn't really focus on 401ks. We focused on making money as entrepreneurs. And now I've got something here. Let me see what I can invest in. I chose Amazon as one of my first investments. So the first trade I put on, this is in the era where you still had to pay $7 to put a trade on. And I used Scott Trade.
I remember that, bro. They used to. Shares. That was the marketing. It was like, it's only $7.
It's only $7. Oh, okay. Well, that's a great deal. All right. Let me buy 100 shares of Amazon. So at the time, I think Amazon was trading around 200 something a share. It's split several times since then, but it was a great early investment. And I liked that Bezos was primarily focusing on reinvesting every penny back into Amazon. So they didn't have a huge earnings report. Every earnings report was still showing basically no profit. And I remember investors being really frustrated about this. And I was like, no, I actually like this, because especially as a startup founder myself, we've always done that. Every dollar goes back into the business. And that's how you amplify growth. You've got to put that money to work. And so that was a big key factor for me. But it also really made me realize that I was more focused on fundamentals than anything else. So I dove into fundamentals. I really focused on what made a company great. I fell in love with Warren Buffett's sermons and a lot of his presentations around how he invests. I read every book I could on Warren Buffett, and I invested in a lot of undervalued companies. That was really my focus. Developed my own approach to doing discounted cash flow analysis and analyzing fundamentals. And I really didn't, I kind of eschewed the technical analysis path for a really long time until around 2014, 2013. I had learned about Bitcoin. I saw that crypto was rising rapidly. I saw how volatile it was. I didn't really want to put all my money into one basket, but there was this very clear advantage between BTCE and Mt. Gox and Coinbase that they were pricing Bitcoin differently. And it introduced me to the first idea around arbitrage. And I was like, well, why don't we buy it on this exchange and just sell it over here? If there's a difference of $40 or $50, there's money to be made here, right? There's clearly a buy low, sell high opportunity.
Bitcoin just broke underneath $100,000 for the first time in months. Ethereum just hit new lows of year. So volatility is still in play, very much so, in the crypto space. So how do you take advantage? Today's sponsor allows you to do so. Breakout Prop, now backed with Kraken, one of the biggest crypto exchanges in the world, is bringing to you the prop firm model that we all know and love. They have one-step and two-step challenges that offer us the ability to trade in the crypto space without putting up a ton of our own capital. Instead, you buy an evaluation, just like you've done probably in the future space or the CFD space, and you prove to Breakout that you know how to trade. And with that, they'll back you and allow you to trade and take real cash payouts with no payout caps, no minimum trading days, no consistency score. A lot of the rules that you maybe are used to from the futures or CFD space don't exist with Breakout Prop. So go to breakoutprop.com, use the discount code ASFX to save on your next crypto prop firm challenge. Again, breakoutprop.com with the discount code ASFX. This episode is also brought to you by TradeZella, the best trade journaling software out there by far. TradeZella and I have been working together for a long time. Umar and I have a great relationship, and every customer that we've sent to him stays a lifetime customer with him. I think that's because people use it to analyze their stats, identify their mistakes, and it actually helps them improve their consistency. If you're not journaling, you're guessing. So go to tradezella.com and use the code ASFX to save 20%. That's ASFX to save 20% and start leveling up your trading today.
And that led to one of my early discoveries of just doing price arbitrage and leading me down this rabbit hole of figuring out how to build automated systems around that. So a friend got in touch with me in 2016 and wanted to build a trading platform. A lot of my background is as a software engineer and as a marketer. So I built a ton of software in my life. And he wanted to build a system that allowed his traders to find these particular trading entries. And it was he didn't even know, neither he nor I knew what mean reversion was at the time, but it was a mean reversion strategy. Still is, it still operates today. And he had a strategy for how to buy when prices are really sold off and how to sell back at the moving average. And this is a crypto strategy. So I helped him build this system. It threw the indicators off. It would, it would send the alerts to all of his customers. And that really got me interested in technical analysis at that point. So I read everything I could under the sun. I remember reading a really good book by a guy named Nicholas Darvis. It's called How I Made $2 Million in the Stock Market. And he had this trend following based approach using boxes. And I fell in love with that approach and just started trading crypto that way. So I would hold baskets of crypto following a trend following approach. The moment the boxes would break at the top is when I would sell. And I did really well with this approach in 2016, 2017. We had that $20,000 blow off at the top in 2017. And when that sell off happened, I was left thinking, well, what do I do? Because there's no shorting in crypto at this time, right? It's not the same industry as it is today. So I started looking at arbitrage opportunities and investigating platforms like Quantopian and trying to understand StatArb and how to dive deeper into understanding the bid ask. And I built a system that was a order book and balance ratio system that would look for these imbalances in crypto pairs and buy when it was imbalanced on the sell side, or sell what's imbalanced on the other side. And it worked really well. 2017, it took off. But I think, to be fair to myself and to everybody who's listening, you could basically buy any crypto in 2017 and you did really well.
Right.
So the system worked, but who knows if it was just the bull market or not.
Could
All
be.
that said, yeah, there was a lot of background there to start with that was really satisfying my desire to learn more about how markets work. And if you can't already tell, I'm very much a curious mind. So I just tried to learn everything I could. And then I decided to want to work in the finance field as quickly as possible. So I went to work for a subsidiary of S&P Global. And I worked there as an engineer, and I was on the analytics team and a creative team there. And I met a mentor of mine who's a CMT. His name is Jason Meshnick. He is the famed creator of the Fear Greed Index that you'll see on CNN's website. And
Sure.
he introduced me to the CMT program. So I started the CMT program, learned how the pros use technical analysis. And ever since then, I've been trading everything from futures to crypto to options to, just holding a basket of stocks as well. So I have an amalgamation of lots of different approaches, lots of different
Why
ways
did
to
you leave
trade.
the software stuff and the tech stuff for the finance stuff? You skipped over that pretty quickly. You just were like, yeah, well, now I went into finance. Why? What brought you into finance? Why did you decide? Was the investing working so well? The crypto was going so well. You're like, I got to get just into finance. I need to leave tech. Is that was the
Well, I was
concept?
still building systems, still in the software space all through 2020 through to 2021, but trading has always been an equal participant in my career, if you will.
Sure.
So it's always been both. There's not a month that's gone by in 22 years that I haven't written some code. So I'm still an engineer at heart, for sure.
For sure.
So at TradersPost, right around 2022, I had a friend of mine who reached out to me and he said, "Hey, you got to take a look at what this guy John is working on. He's built this platform called TradersPost." And I went and looked at it. And I was like, "Well, what does it do? I don't really understand what the whole purpose is." He said, it's like an order router. It will help you send a signal to the platform, and you can automate your trading from platforms like TradingView. And I was like, "Oh, that's kind of cool. I use TradingView every day. I've been using it for years. I've got some strategies I built there, but I basically just wait for the signal and then I manually put the trade on. It would be great if I could just have it trade for me." So I gave it a look. I wasn't, entirely sure how well it would work. And then I dove in a little bit further, and I realized John has an incredible background as an engineer. His claim to fame is he's the contributor of what's called Doctrine, which is an ORM in the open source software space. And Doctrine, as well as the Symphony framework, is used by millions of developers around the world. So John toured the world for a long time, contributed to this project, and worked for a couple of organizations under Alibaba, and then decided he wanted to start this company. The
Hmm.
name, as you asked about, really kind of came from this idea of the old 1800s trading posts that existed at the time. People would come together and trade different types of products, merchandise and things like that. So the product was born as TradersPost, and it was a way for you to automate strategies from TradingView. It has evolved enormously since then. But John and I met each other through our mutual friend. John was looking for a co-founder, so I came on as a late co-founder in August of 2022, and we've grown, about 35x since that point. So we're now serving a very, very diverse basket of customers. We've got stock traders, options, futures, live futures traders, crypto spot traders, and then now prop firm traders now represent a big, healthy percentage of our customers as well.
Great background story. It's very interesting that you came on as a late founder. You don't hear about that, I feel like, too often. That must have been an opportunity that you saw it. You were like, can't pass this up because of what you've already gone through. You've already gotten exits successfully from previous companies. So like you see the path with that. So I think that says a lot. Before we go the prop firm route, you mentioned the first automated system was based in some way around arbitrage.
Yeah.
Are all automated systems that you guys or you specifically have focused on, are they all based on arbitrage? Does someone need to understand how arbitrage works in order to run automated systems? Or was that just the route that you chose because it seemed most appealing in terms of edge and profitability?
Yeah, it's the route I chose because what I was studying at the time had taught me that arbitrage was a classic approach to quantitative strategies. But the more that I studied technical analysis, the more I realized that there's basically two baskets of trend follow or directional strategies. Those are mean reversion strategies and trend following strategies. And if you build a model simple enough, you can build at least a slight edge in the market that gives you the ability to generate profit. It took me a really long time to understand that because
Today's episode is sponsored by Top One Futures, my go-to firm for instant funding accounts. Right now, you can use the code ASFX to get 50% off, making them the cheapest instant funding accounts in the game. You'll get low profit targets, large payout caps, and now no minimum trading days, so you can start earning and taking payouts quickly. If you're serious about scaling your trading, this is where you start. Visit top1futures.com and use the code ASFX at checkout. Hey traders, real fast, before we keep going, I want to let you know one more thing. The Blackshirt Club mentorship is officially open for enrollment. That means we're looking for 10 dedicated traders to join us heading into the new year. This is normally a 3-month program, but I'm really trying to fill these 10 spots, so we're actually offering a 4th month for free. You get to trade live with us every day, you get private coaching calls every week, and you get access to our suite of tools and indicators, all included with your membership fee. So if you want to apply, head to our website. There's a link in the description. It's asfx.biz/BSC. Again, that's linked in my bio on social media, link down below. If you're looking to work with me and our team, apply now.
A lot of the traditional education that I was getting was around this idea of trying to find alpha and getting excess returns above a benchmark without leverage. And that's exceedingly difficult to do. The more I studied the industry, the more I realized there's only a handful of people in the world that are capable of getting true alpha from the markets without leverage. The rest of the people out there that believe they're getting excess returns are just getting beta with leverage. That's all it really is. You're matching the market returns, but you're adding futures contracts or options or some kind of leverage component in order to get a better return. So the shift I made was around this idea of understanding that a profitable strategy doesn't necessarily have to beat the market in a sense. You just have to be careful about risk management in using leverage. So leverage became the eye opener for me to say, okay, well, maybe I can build some models that just work on trend following and mean reversion alone.
Got it. So got away from the arbitrage a little bit, focused
A
more
little
on
bit.
either trend following or mean reversion. Okay,
Yeah.
so now let's give me some stats that we can have the people chew on. Do mean reversion automated strategies perform better than trend following automated strategies, or is it vice versa?
And it depends on what you mean by better, right? Like
Okay,
ultimately
that
what
was a
you'll
very
find
subjective term. That was very subjective.
what you'll find is that mean reversion tends to have a higher win rate, but the drawdowns are significant because you're trying to catch a falling knife with mean reversion, right? If there's a huge sell-off, the signal should tell you that it's a really good time to buy if it exceeds some standard deviation of where price usually arrives at. So you're looking to buy when everyone is hitting the exit button, and there's a very high likelihood that that could still continue against you
For
and
sure.
cause a drawdown. Well, in many cases, it's smart to just continue to buy in that case. So you're just exposing yourself to more risk with every single continued purchase or short sell, right? As
For
you
sure.
add to your position, you've increased your risk and you also increase your drawdown. But if you wait long enough for that trend to mean revert, you can either get back to break even or make a little profit in the process. So high win rate, most likely, if you have a good system. The profit factor can be pretty healthy as well. If you're counting the times that you've produced a profit, but you didn't exit early. In many cases, you got to have some sort of emergency stop, right? Like a total max risk for the day. Well, if you're triggering that max risk, then your losses are likely bigger than your wins.
Right.
So you want to look at both sides of the equation. What's my win rate plus my profit factor and the mathematical expectancy of both? To answer your question more thoroughly, the trend following strategies tend to have a higher win rate, but a lower profit factor. So, somewhere around 60 to 70% win rate, and sometimes they're around 1.5 to 2 on profit factor.
I think that that's spot on with what I've seen. So that makes
Yeah.
sense. Why would someone before, like, because I was going to ask you what would be the ideal trader customer of Traders Post? Why would someone want to automate their process? Give me an example of someone who who the shoe may fit, if you know what I'm
Yeah.
saying.
Yeah, I think we're really after the two baskets of customers. We definitely serve automated traders, but we also serve discretionary manual traders as well. So, on one hand, many of the automated guys just want the flexibility of being able to do more things at the same time. It's really difficult to build a system on multiple instruments and trade them all at the same time. If you've tried to do this in prop firm trading where you're trading multiple accounts at the same time, it's incredibly difficult to do. So our system really facilitates this idea of automating multiple things at the same time. Multiple strategies can be running, multiple accounts. You can connect it all in one location. So you could have some stock trading going. Uh, some people couple that with options strategies at the same time. To give you a really simple example, you could have, let's say, I want a trend following strategy in the SPY, and I'm going to buy when we hit troughs, that are more than 30%, and I'll just hold through these trend areas. But to protect my downside, with every buy signal, I wanted to automatically put on a put contract, and I have an alert going out every month that just buys put contracts and just holds them to expiry. And that can help from some of the downside. We have some people who just trade options on the platform, and they also do some stock trading at the same time. So it really depends, but the freedom and flexibility to do a lot of things at the same time is obviously the objective. For prop firm traders, we allow them to scale their accounts by connecting multiple prop firms or multiple platforms. It supports Tradeovate and Project X, and you can trade all of those accounts at the same time.
So it's really somewhere that if you're like, I would even say a new trader trying to manage multiple accounts or an experienced trader maybe trying to manage accounts across multiple markets. There's almost like two different ways. Am I kind of hearing that right? Where like,
Yeah.
let's just say it's me and I'm not trading in with automation or with some type of copy trader like this at all. If I just want it to be Austin in prop firm world, I can come in with Traders Post, copy trade across multiple prop firms. It funding companies, whatever you want to call them, copy
Yep.
trade, Tradeify, Top Step, Top One Futures, whoever it may be, copy those all. But then if I'm making money and I'm taking payouts and now I'm wanting to do some stock trading and get myself working there and even create a hedge with an options trade to protect my
Sure.
downside, I can also automate that through the same backend platform. So it's all kind of coming
Absolutely.
together. Yeah, that's super interesting. That's why I was like, when we first met and everybody was talking about you guys like Randy and Nick in my group, I was like,
Mhm.
that's what I think people really want because there's copiers. Now, tell me if I'm wrong, because we have to touch on like the competition. There's copiers out there that will copy the trades, but I think Traders Post seems more detailed, more
That's right.
intricate with how you can do it. Can you explain that a little bit?
Yeah, I think our differentiator in the trade copying space is really around how our system was designed. We don't we don't compete directly with the trade copiers because our system was designed to handle all kinds of different tasks, right? It maybe another analogy I could give is we're kind of like the Zapier of trading platforms or execution platforms.
Sure.
You connect all your accounts, you send the signal, we route that signal to whatever account you want, and we help you with position size, take profits, stop losses, rules around how to retry, when to restart, trading windows. Like there's all these execution rules that you can attach to each incoming trade to make sure that it's filtered and managed exactly the way that you expect. On the trade copying side, that also means that when you send a signal to us, we trade all your prop firm accounts concurrently. So I like to use this lightning bolt, or excuse me, Christmas light analogy. In the old school Christmas lights, if one of them died, they all died, right? Well,
Right.
that's sort of the problem with some of these trade copiers out there is they listen to a leader account, but if the trade fails in that leader account, all the other ones are going to fail as well. In this
Sure.
case, you send a signal to us and we trade all of them concurrently, which means they're not in sequential order, no linear order. It is all done at the same time. So if three of them fail, the rest of them are still going to succeed because they're all being done. They're all being executed independently.
It's a good answer. Let me ask you another. I think you'll have a good answer to this too. Right now, what's the biggest issue with Traders Post? What are you guys struggling with the most that you're trying to smooth out? Maybe even touch on like what's coming for the user experience that you guys have
Yeah.
heard feedback from. Because all I've heard is good things. It does seem that some people are like, "Hey, I don't know how to do automation. Automation's a tough word that scares me." Is that it? Are you going to say the biggest barrier is like people being undereducated or intimidated by automation and copy trading?
No, I actually think that the two barriers right now for many people, and this is just based on direct feedback from our customers, and we listen very carefully to what our customers are asking for, is that they don't prefer the way that our system works right now. They want to trade on our platform directly, and that means we need to
Mm.
actually get charts integrated onto our platform. You can execute a trade; it will then send that signal across to all of the accounts, and then you can track live P&L right here on our platform. The other thing people have obviously asked for is analytics data. So we're baking in a journaling system and analytics package that allows you
Oh
to track
man,
the P&L of every single trade that comes through. You get everything at a grand portfolio level, account level, strategy level, signal level. This helps you break everything down and see what's working and what's not. And honestly, Austin, that the analytics side is where I feel like I am most excited. My team and I
I
have
could tell.
sat down in a room together, and we've come up with some incredible ideas of what we're going to track with every trade that comes in, and how you can couple this data with external data. So we're even thinking
Interesting.
like, for some traders, they might want to get really hardcore with this, trade heart rate, trade like blood pressure throughout the day. We can have you send in your live stream on, if you were live on the air and you recorded the whole thing on YouTube, for example, combine that with the actual trades themselves and start to analyze data in the process to figure out what's
Oh,
leading
that's
to good trades
crazy.
and not. Yeah,
AI
we came up with some
scans the
crazy
video.
stuff.
How was Austin reacting when he took the short and he started screaming, "Suck it lower" to Randy? You know what I'm saying? Because that's what
Exactly.
happened today.
Exactly.
Oh, that's okay. So that's super interesting. I could even see like if you're wearing an Apple Watch, sync your Apple Watch to the software
Yeah,
somehow. The software and the other, you just have to like overlay time on each other, and then boom, you would know your heart rate at the moment you took the trade, and your heart rate the
that's right.
moment you take that.
Yeah.
That would be crazy. That's
How
some next
often are you
level.
in the zone? Maybe you give us your diet and workout journals as well. The idea is to eventually get to a point where we have coupled this with as much external data as possible to give you some insights as to where the correlations are. You know, we
Interesting.
have good weeks and bad weeks, especially as discretionary traders. And if we are the machine putting on trades and it's not a fully automated system, then you got to get as much insight as possible on how to make some improvements.
Oh, okay. So before we get into the screen share, this is really good. I think we should just touch on the idea that I spoke about a minute ago of like, Mike, I'm intimidated by the word automation. I'm
Sure.
intimidated by this idea of like software on top of my trading. What's the way to get started with a person? Let's just take a prop trader for an example, because I'm going to say
Yeah.
most of my audience is probably going to be a prop trader. What would be like step one? Would it be like, okay, you need multiple accounts across multiple firms?
For sure. I'm not, definitely not one of those salespeople that wants to convince everybody to use us. We're not a good fit for every single person. You really have to have kind of an automation need or a scaling need for it to make sense to use TradersPost.
Okay.
As time goes on, we do have educational products that are coming and an analytics package, and you could decide to use us to keep track of all of your trades so that you have a good journaling system for everything you do. But again, it goes back to this point. You need to be doing kind of more than one thing and one account in order for this to make sense. So if you're an early prop firm trader, you're just starting out, you're probably best staying on that journey, leveraging, guys like you to learn as much as possible and testing yourself on one account and keep your cost and your risk small. But when you get to this point where you found an approach that's working for you, and you're ready to scale and you want to add multiple accounts and you're figuring out for the best way to get in and out of your trades and manage risk on each account, manage position size on different accounts, we're a fantastic platform for that. And this allows you to scale out across platforms and across prop firms as well.
Love it. All right. We're going to get into some screen share here. I'd like to just kind of show people the execution of it a little bit, what it's like. What we touched on this a little bit in the story though, so I want to go back to it. What brought prop traders to you guys? Can you tell that story a little bit about how prop traders kind of popped up on your radar and now how it's, like you said, it's exploded really, right?
Yeah. Yeah. It's actually a hilarious story. So it was around November of 2023. John and I were monitoring our logs, and we discovered that right at the market open, there was like 1,000 or 1,500 trades coming in at the same time across a cluster of accounts on our system. And those trades were starting to cause a little bit of a problem with our queuing engine. And we were
Mhm.
getting concerned about execution. The this type of activity normally in a live environment is no problem at all. We can execute those. But we noticed that all of these trades were going to simulated accounts. And we're like, why are so many people trading these simulated accounts? This doesn't make any sense.
With the same trade.
With the same exact trade, same exact entry. And so we were trying to figure out where this was coming from and why it was all paper accounts. So there were sort of two things happening at the same time. One is that we had just gotten into futures on our platform. We just launched Tradeovate and we just launched TradeStation. Tradeovate, as it happens, is the back-end trading execution system or back-end broker for many of the prop firms that were around at that time
Right.
and still are. These guys had figured out that they could connect TradersPost and then connect all their prop firm accounts to TradersPost and send all the signals and trade them all at the same time. And so we reached out to the main community organizer of this group, and we're just kind of asking, like, why are you guys trading these simulated accounts? And he's like, well, because they're paying us to anytime we hit these profit targets. And I'm like, no, hold on. We make money in the markets by trading live accounts. How are you making money on simulated accounts? And this is the first time I had learned that prop firms were even a thing. I knew about the traditional prop firm model, like S&B
Right.
Capital. You join in New York, you become a desk trader, you got a risk manager, they give you real capital, so on and so forth. I'd never even heard of this part of the market yet. So we realized, okay, we've got a real opportunity here where we can facilitate this type of trading. We understand why it's important and where the value is to our software. So we've made significant improvements to our system to support almost 30 prop firms on our platform now across Tradeovate and Project X. And just in the last, I'd say 4 months, our growth, about 40% of our customers that sign up for TradersPost are prop firm traders now. So it now
That's
represents
crazy.
about 15% of our overall customer base. We still have a ton
Well,
of stock traders, ton of options and futures traders, but prop firm is huge now.
I was gonna say it just shows you the need for it probably, right?
Oh yeah,
Like, the fact that it's
absolutely.
growing so much just says how many people were waiting for something like this, and
Right.
now that it's out, now they can try it. Yeah. So, okay, let's get into some screen share, Mike. Let's show people what we got cooking. Did
Sure.
you take any trades today?
Yeah, I took several. Yeah, lots of little
Of
scalps
course he
here. So,
did, of course he did. So, yeah,
and I'll
tell us
show
what we
you.
got going on.
Sure. This is more of a discretionary approach. So lots of noise here on the charts. Let me see if I can clean this up a little bit. I do a live show every morning, Tuesday through Friday, and I share all of this. So if anybody's interested in watching how I'm trading the charts here, you're welcome to. But I have a couple of different approaches. If it's choppy, I'm going to scalp for 10 or 15 points on NQ. And right now I'm just trading MNQ alone. We just got news from the Fed on the FOMC decision for Fed interest rates, and it came in exactly as expected. So it's been really choppy around VWAP here. But what I can do is I'll go ahead and put on a trade just so you can actually see it,
Cool.
and you see how it actually links to TradersPost. I have what's called a scalp strategy. I've named it this, and I've connected all my prop firm accounts. And this allows me to send a signal to TradersPost. It looks like this. It includes this message, which we call a signal. And that signal includes the ticker I want to engage with, the action, whether it's buy or sell or to exit. And it includes some instructions around, the take profit, stop loss, any other rules that need to be sent along to the broker. Now, this is a standardized message that I can build just by going to the dashboard, putting in the ticker, typing in my order on the order form here, and I can actually save the signal as a template on our platform. So you don't need to know code or know JSON or any of that kind of stuff. You can actually build it all here. So it's really meant to be a no code solution for automation, and that's another reason that I think it's attracted so many customers. So what I've done is with my scalping strategy in TradingView, I've created all these alerts that connect to a webhook URL to TradersPost. So if I show you here, here's a scalp long entry alert that's on the chart or in my alert panel. This alert is basically just set up to where it's going to fire the moment I hit play. And the thinking behind it is if price is greater than 0, which it always is, then it's going to send this message to TradersPost with a take profit of 15 points and a trailing stop of 20 points. And that's going to be sent to my TradersPost webhook URL for my scalp strategy. And not only that, it's also going to trade that signal across all 6 of my prop firm accounts that I have connected here. We do a ton of stuff internally to help you track what's happening with each trade. We log the event. You can see even slippage insights. When I took this first trade earlier today, what was the price that I sent at the time of the trade and what did I actually get filled at? So you can see here, I had about 25 cents of slippage on this
Mm-hmm.
trade. And you can see it included my limit sell and my trailing stop. This one got stopped out and the limit sell was canceled automatically by the broker. So I can now trade all these accounts at the same time. Why don't I put one on and I'll show you what this looks like.
And just to be clear, that would
Yeah,
be you wanting to fire off an entry right now. Market's coming down. Let's fire off a short. I need to get involved. We're coming off VWAP. Cool.
that's right.
If you wanted to have these triggered at certain levels, almost like a pending order, you can do that as well, correct?
You could. Ah, dang, we missed that short.
Yeah, there it comes now. Pal must be talking now because it's 2:35, so he's probably coming on saying something now.
Yep, they already got the transcript for his message then.
Yep,
There must be something about the economic data there. All right,
yep.
let's see if we can sell this pullback a little bit.
Okay,
I can trigger an alert to set a resting limit order with the broker, and it could be a different entry price. But what I usually am trying to do is just get the line alert to trigger so that it triggers a market order to get me into the position.
okay.
Um,
Can you explain that a little bit more? Because I do think that if there's anything, like I said, that I've heard the pushback from, it's this. It's like people think when I trade with TradersPost and I'm copy trading to all my prop accounts, they think I can't do market orders. I have to do
that's right.
limit orders. That's
Yeah.
not true.
So it's not true. So let me take these lines off the chart because that's where I think people get confused. If we just go to my button entry, which just is that if the price is greater than 0, send this alert and it's going to happen right away, right?
Yep,
That
yep.
includes a sell, and that's going to listen to the settings of my strategy, which is set to market entry and market exit. So all I have to do is hit this play button, and that's going to send the trade along the wire, off to my webhook, off to TradersPost. So why don't I do it right about here?
And the news that just came out says Powell says December cut is not for sure, far from it. Strongly differing views at the meeting on how to proceed. So the market's probably coming down here. So this would be a great moment when you're like, hey, I'm getting news. It's FOMC day. Market may want to come lower. I can now still take a market order, get myself involved in the market quickly across all my prop accounts.
Correct. So that one took the trade. Let's go back to
Okay.
my strategies. I can show you the signal for it. And you
Okay.
saw it was updating on the live screen there. I have the sell
Yep.
order that came through. Super choppy environment. The trailing stop was able to drag up just a little bit. And I was able to trigger that stop on all 6 accounts at the same time. So they all got executed exactly the same way.
What's the
Uh,
craziest slippage you've seen? Do you ever have people? Because no one had said anything to me about the slippage yet. Do you guys have that really ironed out? Is that why? Like, is that not an issue?
I mean, moments like right now, you can see I had $2.50 of slippage because it's volatile right now. There's no
Sure.
way I'm going to get in with
This would be
25
the
cents of
extreme.
slippage. Yeah,
Yeah,
this is
this would be
kind of
the
an
extreme.
extreme. I definitely rarely see $3 of slippage. What we mostly see is about 25 to 50, and sometimes you see positive slippage. You might be up 50 cents or 75 cents from your position or from the
Sure.
signal.
Sure. Okay. That's very interesting.
That
So
was a
these
simple example.
simple example. So these, what are these called here? These logs along the right side. Is that what you're clicking to execute the order? You're clicking the play button on
Yep.
those scripts, basically. Those are scripts of code.
These are actually just alerts
Okay.
that are built into to TradingView. So I can go create a new one, for example, where I just create a new alert and I say price is greater than 0, which just means it's going to trigger right away. And I
Hmm.
put in my JSON message here that I get from TradersPost, and I
Hmm.
include my webhook URL. And the moment that I create this, it's going to fire off that alert and fire off that signal. So that means that this can be done with any type of alert on TradingView. It can be done with a line alert. It could be done with a standard price alert. It could be done with a strategy or an indicator. You might have an indicator you add onto the screen. Like I know one of the ones that's really popular is the UT bot alerts. A lot of people like this one because it shows the little buy and sell label. I can attach an alert to this and make this a fully automated strategy by just saying add alert to this. And each time there's a long signal, send the message to TradersPost and send it to this webhook URL. Anytime there's a sell signal, it would send off the sell order as well.
Interesting. I'm definitely following it even more now the second time because we did that walkthrough last week that you were showing it to me. So
Yeah.
now on the log side here again on the right side is the market's coming lower. You have scalp, 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 scalp. Do you have to click the specific one for the specific strategy? I would assume that you want to do so. If you want to put it in the scalping strategy to those accounts, you have to do the one that says scalp button long
Or
entry
trend.
and then
Yeah.
or trend long entry.
That's right. Yeah. So I
Okay.
do have to find the right one if I want to click a button, but most of the time I also have lines on the chart. So I can actually move a line down to get into a position and just drop it on the current bar. And that's going to execute a trade right away. Well,
Because that's an alert.
it's alert tied to the line, to the horizontal line.
Yep.
But there's some congestion on TradingView right now. So it took a minute to actually get that. It's taking a minute for the alert to fire. This is
Interesting.
another reason why we want to get a lot of this onto our own platform so that you can trade from our system and not have to worry about congestion issues like this.
Oh, that's gonna be a game changer. Is that gonna look something like Project X?
Very similar. Yep.
Yeah,
Very
yeah. I
similar.
mean, it's cool that we can build off of TradingView to create other products that traders can use. So we already talked about a little bit of like who this product is for, as far as the trader that would use it, the trader that wouldn't use it. It seems super user friendly. Is there more in the back end that we should touch on, Mike, just to show people of like what does it look like when you're maybe adding different accounts, different uh, asset classes across if you're trying to do options and do futures, maybe something like that?
Sure. Yeah. So I have I have a little Roth IRA here that I play around with, and this
Nice.
one allows me to connect a stock trading strategy to it. So I have a separate trading view chart that sends in signals on what to buy and when to buy it.
Okay.
And then I can also, of course, couple this with strategies that I've connected to my prop firm accounts. But I can see all my accounts in one place here. I've got a Coinbase account, I'll have a TradeStation account, Tasty Trades here, and any other broker that I want to connect is available to me here. We've got all these prop firms supported,
Yep.
all these stock brokers as well. We've got futures firms available, and then of course options and
All the
spot
big guys.
crypto. All the
Dude,
big guys.
speaking of E-Trade and commissions at $7, we don't get the E-Trade baby commercials anymore. Remember those?
I do. I do.
Prop firms should take that, dude. A prop firm should do a baby commercial as
Just
like a
talking to you about the
nostalgic
success
ad.
of prop firm
Yes,
trading for
dude. That
sure.
would be so funny. I have some
Given,
funny ideas when I'm doing these podcasts about that. What were you gonna say?
as given the AI world we live in right now, like
Oh,
you
I
could
go
make
make it
one
right
right
now.
now. Go
Right.
make a
Go to
couple of
Sora and
prompts.
make it
Yeah.
right now. Yeah, so that actually leads to a good question, Mike. What does this look like as automated trading progresses with AI? Does it look, of course you touched on like the integration of multiple things from the outside world into the digital world, and like we talked about that, but like this seems to be the direction that we should be going as retail traders, to me,
Yeah.
not just for scaling, but for managing accounts across multiple asset classes, across multiple platforms, because AI would just do that. Like that is, it
Yeah.
seems like it's the direction of the technology, right? So,
Yeah.
how does AI play into the future of Traders Post?
We've actually covered this on a show of ours we call Blueprint, where Tom
Okay.
has actually outlined how he builds AI systems to generate signals that he sends to Traders Post. So I do
Really?
want to explain too that TradingView is just one of the places that you can throw off signals. You can send a signal from TrendSpider. It could come from Zapier. It can come from a Discord alert. It could come from TradingView, or you can build a fully fledged, completely automated system that listens to prices um, on your own, coded environment, and you've got AI analyzing that data, analyzing some kind of chart that you've generated, and then decides to send a trade off to Traders Post to get you into a position or manage multiple accounts at the same time. So we do have a cohort of customers that is very sophisticated, that have their own Python environments. They write it all in code. They send in their own pricing data, and then they send the signals to Traders Post because it's easier for them to connect to Traders Post and trade with all these different brokers rather than write an API for each of those brokers independently. We've kind of solved an aggregation problem for them.
It's so interesting how just the direction that we are going to go. Makes me wish I would have done more computer science in college. You know what I'm saying? I wish I would have learned more code. I feel kind of illiterate in some ways. You would agree code is its own language. Like it really is. Like the fact that you can pick it up and read it and I can't, it makes it qualifies as a language. You know what I'm saying? And I
Yeah.
feel like as traders, people are kind of ignorant to it a little bit. So products like this that can streamline that like do it for you, make it easy with the user interface. You just put it in and then you copy and paste. Like I think that's probably the direction of like a bridge that we need as AI continues to become more and more. Because like companies like you guys will always be on the, I feel like the head of it in the lead with it. And then the retail trader is kind of stubborn in some ways and is stubborn to get with AI. So it's good to have something like this that kind of bridges that, keeps the retail trader still modern enough. You know what I mean? You don't want to be like the dad with like an iPhone 8 when everybody's on iPhone. What are we on now? 17. You know what I
Right.
mean?
Yeah, yeah.
Yeah.
No, I
Yeah.
think you're spot on, and we are definitely seeing more and more people using environments like ChatGPT or Claude Code in order to set up their own strategies or
Oh,
write
for
their
sure.
own indicators, or even just pull in the pricing data directly from the CME and build an indicator on their own. So
100%.
the growth of AI trading is definitely very obvious. There's definitely a lot of companies out there looking to support it. I'm particularly fascinated with this idea of getting AI to review charts for me. So forget about the data for a minute. Don't feed it the price data. Feed it the actual chart. upload the image of the chart and say, what do you see here from a technical analysis perspective? I think that's super interesting as well. But couple
Yeah.
that with data as well, and now you've got a pretty interesting approach for managing your own entries and exits. Obviously, the biggest thing is always going to come down to risk management. So make sure you've got your stop gaps in places, your stop losses are set, and your max risk is in place. Because this game can't be played with just throwing trades around at full port.
It takes some experience to learn that. Unfortunately, some of us come into the game thinking we'll be the exception and we don't need to follow the golden rules like that. But it's
For sure.
time is the best teacher that way. You talk to a lot of traders doing the show, also getting feedback from the customers. What would you say the biggest mistakes traders make are? Not just with automation, but just in general. Like what stands out to you? What do you when you think about how do you become a better trader because you're in the markets every day? You
Yeah.
often will probably think about what are people doing and I should probably do the opposite because a majority of people lose. And then you also like I said talk to people and you see them, you see their trades. So what do you think they are?
Yeah. I think a lot of it is obviously being in a rush is always a bad idea. I've never met a trader who's like, oh, yeah, I only traded for 3 months and I'm a multimillionaire,
Oh,
uh,
if only, dude.
if only, right? It's not a lottery ticket. It's a skill we have to develop, and that skill is something that we have to hone in on over many, many months and many years of practice. And if you develop that skill well, especially around managing risk, I think it's obviously incredibly rewarding. And the mistake that I see more often than not is people not sticking with the approach that they've spent so much time developing. They analyze the markets, they found an approach, they find an edge of some kind, they've back tested it, and then the first trade comes in and it's a loser, and they're like, "Oh, this isn't going to work. I'm done. I'm out of here." And that's just not how the stats are going to work, right? We need at least 100 trades of data to determine if your approach is working or not, and to give the opportunity time. So I think that's definitely one thing we see is people joining TradersPost, and in their first 2 weeks they're already quitting, saying that their strategy doesn't work, and we're just wondering to ourselves like, well, how much opportunity did you really give it,
Great
and
point.
how long did you spend working on it, right? I think beyond that, the other thing that we see quite a bit is just people YOLOing into trades instead of taking their time and managing their risk in a way that gives them more survival time in markets. I like to think of this in terms of survival. This is a really tough game to play. It doesn't matter if you're using automation or you're manually trading. You still have to survive the drawdowns long enough to stay in the game for all the upside and all the opportunity.
So
And
true.
people put huge positions on, and we're just sitting here going, why are you doing this? This is
Well,
too
because
much
those
risk.
challenges are cheap and they'll just go through them like nobody's business, Mike. That's what it is. They're so
It's
cheap
happening
now.
in real accounts though too, Austin.
Oh, I can imagine. Well,
Yeah.
I'm claiming this thing here. I said this on a podcast a week ago. I was like, prop firms are the Ozempic of day trading because they're good in the short term, but they're building underlying bad habits that you wouldn't
Yeah.
want in your personal account. It's
Right.
literally the same thing. So
Yeah.
I feel like we're now going to experience that. We're going to see people go live capital and be not able to maintain it the same way because it's a totally different game than prop. But I
Right.
think experience teaches you that more than anything else, like I said.
Yeah.
With the mistake about like people rushing, so
Yeah.
true. It is just so true. How often people set the wrong expectations and then rush to try to meet that outcome, the desired outcome, and it leads to letdown. So it's
Yeah.
just so common. So it's just great advice. Unfortunately, no one's going to take it because everyone comes in, like I said, aggressive and thinks they're the exception, so on and so forth. But it is the best advice to slow down, survive, stay in the game. What
Yep.
would you say is the way to identify if you're a trend following trader or should be a trend following trader versus a mean reversion trader? Do you have any tips for that? Because I think even I a little bit sometimes struggle with wanting to be a mean reversion trader and losing as a mean reversion trader and then making my money back as a trend trader. So what
Yeah.
would you say like to picking which side of the coin? Do you just try them both and see which one you trade better?
I think it's your risk tolerance. Some people end up more
Okay.
comfortable with those drawdowns, and I mean, obviously, if you find somebody that's buying in a sell-off, they're a mean reverting trader, or if they're selling in a huge rally, they're looking to fade the other side. That mean reversion process is really it's tough because you have to endure some volatility in the process.
Oh my
The
God.
vast
Yeah.
majority of what I see though is trend following. That's
Yeah.
mostly what people are doing.
I think like when I'm coaching guys, I always end up saying to them, like, if you don't know, let's start with trend following and see
Yeah.
if you hate it. you know?
Right.
But I have a girl, her name is Rebecca. She streams for Tradeify. Do you know Rebecca, right?
That's one of the first prop firm traders we worked with on
So
TradersPost. Yeah,
shout out to Rebecca. She's been on the podcast a couple
she's
times. So
awesome.
Rebecca and I go way back. And Rebecca struggled as a Forex trader. She'll tell
Mhm,
you. And she had to take a break from trading and came back to it and rejoined our group and blah, blah, blah. And in futures, she's crushed it. But she'll tell you when we started the coaching back up, this was probably within the last 18 months, maybe 12 months ago. She and I looked at TradeZella and we looked at her longs and her shorts. And at the time, the market was trending higher and she was performing better with shorts.
mhm.
That analysis of her data is what sparked her down the rabbit hole of trying to figure out if she was better at a mean reversion or a trend following. And even to this day, like most of her big trades, the big money trades are short. She's a mean reversion trader when markets are extended after grinding higher.
That's
She'll
what
look
she
for
likes.
shorts. That's what she
Yep,
likes. And we would have
yep.
never figured that out if we never analyzed and never tried to look at the data. You know what I'm saying? And I think
Mhm,
that's even more of why I'm like super bullish on this traders post thing, because I think as people see you guys come out with the trading on Traders Post platform with the analytics package, you see all the different ways you can kind of find weaknesses or also find strengths. I think that's going to become extremely popular. TradeZella has become extremely popular.
yeah,
People analyzing their own data has just become popular. It used to
yeah.
be, no, I'm not doing that. I'm just slinging penny stocks or I'm slinging like that's when I got started into trading. The experience I'm just slinging it, bro. I'm just sling. Now it's like people are the retail guy at least is taking his business much more seriously because
Mhm,
people are seeing the returns from it. So I think that's where products that provide that analytical insight and then,
mhm.
can offer now like this automated systems around what you're doing well and then avoiding what you're not doing well. Like for Rebecca, the reversion stuff, it's a game changer. And then
I
like,
totally agree.
your guy, Warren Buffett, he always says you got to make money while you're sleeping. Is there any way to automate these strategies to take trades through the Traders Post platform while you're sleeping? You'd say
Of course.
yes, right? Because you could set
Yeah.
market or limit orders and you could, yeah, set alerts and boom, you're there.
And you can run this on electronic hours, or you can run it in the extended session on stocks or extended session on options. Obviously, crypto is 24/7. So we've got plenty of people who've automated strategies in the crypto space that are running all day and all night. So this is very much a 24/7 tool.
Crypto boys don't sleep, Mike. You know this. They don't sleep. You're an OG crypto boy.
Do
We
you,
found
do you
out
know how
today.
many do you know how many sleepless nights I had in 2016 and 17?
Oh,
Alerts
dude, I
going off
can't
in the
even
middle of the night.
imagine, bro. Oh my god. We some of the guys in our group trade with some tick strike. You know what tick strike is?
Yes.
And then you know what the book map has this thing that talks to you too. It reads orders out at you and big
Yeah,
orders
yeah,
coming.
yeah.
And we're always like we call it Jarvis in the room because you'll be on a video call with somebody and then they got Jarvis in the background calling out some order, calling out some level. But I can imagine, dude, in the heyday of the crypto, that was like the first really big popular crypto boom. Bitcoin
Yes.
had boomed before, but it was for nerds and for internet boys. That 2016, 2017 was the taxi cab drivers, the Uber drivers, everybody was talking. That was the first time. So, dude, it must have been insane. You got any good stories from that time to cap us off the episode with? Anything you could share?
Not very fun stories. They're sort of my most painful stories.
Well, those will
Uh,
probably get us clicks, Mike. You know that.
Obviously, one thing to analyze in your trading and investing career is the opportunity costs. Warren Buffett talks about this a lot too. He's got several opportunity cost trades that he still refers to because he knew what he could have had available, but he sold too early.
Mm.
If there was no sell button in Bitcoin, I would not be having this conversation with you because at one point in 2013 and 2014, I was holding somewhere around 800 and 1,000 Bitcoin. They just weren't as expensive as it is today. And you had no idea where Bitcoin was going back then. It was just a weird internet money thing. And who knew if it was going to be the next revolution or not? I certainly didn't think so. I was just trying to figure out how to profit from it on an arbitrage basis. So the
Bro, you got to
idea of
process that.
missing Bitcoin at 1,000, having about 1,000 Bitcoin at one point is tough.
You can't linger on that, right? Like that's the lesson. If you linger
Yeah,
on that, dude, no, you can't. You have to
no,
just move on. Like it's just how would you have known?
you wouldn't have. Yeah. The
No,
one
and
thing
then
I
of
can
course,
say, and
yeah.
I've been really good at this. This is definitely one lesson that has helped me. Right around 2014, 2015, I had tried my hand at a few trades. I was in that Amazon position, but the one thing I had decided, especially after taking some courses on valuation, was that why trade at all? What's the point in trading? And a lot of it is risk management, sure, but a lot of people struggle to beat the market, to even
Yep.
exceed the market returns.
Yeah.
And I decided then and there that one thing I would do is always compete with my long hold portfolio. So 50% of every dollar that I'm willing to risk goes into a long portfolio. And I look at those annualized returns versus what I make as a trader. And if I'm not exceeding that as a trader, then what's the point in trading at all, right?
100%.
But at the same time, I don't want to have that opportunity cost anymore. I want to make sure
Right.
that I'm holding through all of this over I've been trading for over a decade now, and my portfolio has done very well in that time, and I've just continued to add to it on, a routine basis. I buy more in the troughs, but ultimately it's dollar cost averaging over a decade, and it's done very well. Competing with that side of it, I think, is a good, healthy way to make sure that you don't miss the opportunity cost, but still dabble in the markets. The other, I think, issue I see with a lot of people is they just want to put all their eggs into one basket. They just want to take every dollar of the available capital that they have and put it all in this one
Really want to
trade.
flip it. That's the
Yeah,
mindset of if you need money. When you need money, you look for flips like that.
right.
But I think and I think it was actually Stanley Druckenmiller that said, "Don't spread your eggs, right? Put them all in one basket and watch the basket." I think that's his quote, but I don't know if I agree with it. Like you're saying, I think diversification
Sure.
in the right way is the answer because then
Yeah.
you're protected. You can't be all in.
No. The one thing I didn't do though was build and hold a crypto portfolio over that 10 years. I still stuck with stocks because I still wasn't sure where this was going. It wasn't until probably like 2019 when I realized institutions like BlackRock were getting involved. Now,
Right.
okay, crypto's starting to make more sense. Now we got the
Correct.
government buying it and keeping it as
But
a
even then,
treasury.
like if
So
you would have started building a portfolio in crypto in 2016, 2017, how much have some of those other coins appreciated compared to just Bitcoin? If your portfolio is just Bitcoin, it probably would have done just as good. I mean, of course, there's some shit coins that probably are ridiculous, but you know what I'm saying?
yeah,
If you were holding XRP since 2016, maybe you tripled your money, maybe 4 or 5x'd it, but Bitcoin way more than that, I think, right?
I've done an equal weighted portfolio of the top 20 by market cap for several years now. And it's
Okay.
it's basically most years it's either slightly above Bitcoin or on par with Bitcoin. So, at the end of the day, if you want a little less volatility, then
You
go
just
with
take
with
the
Bitcoin.
Bitcoin. And
Yeah,
if you want more volatility, buy some triple levered thing on MicroStrategy, and then you can have all
right.
the volatility in Bitcoin you want. You know what I'm saying? There's so many ways to play Bitcoin nowadays. It's not like what it was in 2016 where we were just buying spot Bitcoin. And you know what I mean? Like you said, there was, I mean, I don't even know if perpetual futures contracts were big in crypto in 2016 yet.
Nope.
Maybe they were
Nope.
just kicking off. Right. So like
Yeah,
that all came 2017, 2018, 2019 after that bubble, so to speak, that accelerated high is what
that's right.
created so much interest that then led to what we now have. You know what I mean? It's those
That's right.
run-ups that get so many people involved that then they can't say no. That's why BlackRock and everybody has their ETFs. They bought at 70K. I mean, there's people that believe we'll never see it below 70K again because there's too much big money involved at that point. Right?
Could be. The one
Yeah.
thing I will say is that Bitcoin just doesn't move the way it used to. Having come from
No, no, big
2013,
money slows it
2014 days.
down, dude. It's
That's right.
fat now. It's fucking yeah, dude. No
It's
way. So
way
you
too
have to
fat.
find alpha somewhere else, right? It's way
That's
too
right.
fat. But you know
Yeah.
what? There's so many cool things, dude. Like I love the little things that spin off these industries. Like Gemini has a crypto credit card that if you spend like dollars at the gas station in the grocery store, you get Bitcoin back. That's a great thing for people that don't know a lot about this stuff, for them to get involved in it, get a little piece of the action. That could pay off in the long term. Maybe not. Maybe Bitcoin's a CIA scam. I'm still like 10 or 15% believe in that, but maybe it does pay off. Who knows?
Okay.
Tucker Carlson said that. I don't know if you knew that. I asked my last podcast guest, his name is Nick. I was like, "What do you think of that?" Because Tucker Carlson's big on this. Bitcoin maybe is
So
created by the CIA. Have you
Satoshi's
ever
the
heard of that?
CIA operative or something?
Okay, well, go to listen. Have you ever read the paper "How to Make a Mint" that was written by some NSA people in 1999 or 94, bro? It's
No, but I've heard
very
of it.
interesting.
Yeah, yeah,
Okay, so you've heard of this "How to Make a Mint" thing. So that
yeah.
got me on the rabbit hole a little bit. But who knows, dude? And governments control a lot of it, right? U.S. government's got a lot of Bitcoin. China's got a lot of
I
Bitcoin.
get it.
So who
Yeah,
knows? I find it interesting that some of the Bitcoiners are like not happy when you talk to them about Satoshi. Like you ask who is this guy or what was this entity, and they're like, it doesn't matter. He created the ultimate form of money. It doesn't
sure.
matter. But I never really got down that rabbit hole. I was like you. I was just trading it. You know what I mean? I never built a crypto portfolio. I thought it could be a scam. I never knew. But now
Yeah,
here we are.
here we are. Well, like I said, that's the old school story. The opportunity cost. You're never going to see 1,400% returns in Bitcoin in 1 year anymore, unfortunately. But there was a time.
There was a time. So to wrap us, Mike, we'll have a link in the description, of course, to get
Sure.
everybody signed up. Um, do we have a free trial, a free
We do.
version? Okay.
Yeah.
So people can use the link. They'll be able to get access to that free trial, test it
Yep.
out, see if they like it before they commit to the paid. What's the difference between the free and the paid?
The free just doesn't allow you to submit the trades automatically to the broker. So you get 7 days to really kind of try it out and make sure that it's going to work the way that you want it to. Once the trial is expired, it turns off that ability to auto submit.
Okay.
So if you want to upgrade, then you've got the a plan available to you to connect to one asset class at the starter plan. And then if you want to add a bunch of accounts, that's all a la carte. So you can just add as many as you want, up to 50 accounts on our platform. That allows you to do account scaling for the prop firm guys. For everybody else, most people only have like 2 or 3 or 4 accounts on our system anyway, and they're just trading stocks and options simultaneously.
Cool. I love it. Yeah. And everybody, as far as educational resources, once you're signed up, they run a show every morning. You guys are streaming on YouTube. The YouTube
Yep.
channel has a ton of videos, a ton of breakdowns. The FAQ, the knowledge base is extensive as well. So there's a lot that you can deep dive with this if you do have questions. If this goes well, Mike, ideally we will get questions and comments on the YouTube video for this. Maybe we'll have you back before the seminar for a part 2, and then maybe we'll be seeing you in May in Tampa. But I think what we could do is hopefully show people if there are any areas where either you guys come out with a new update, or if there's areas where there's a lot of questions, we can kind of do another video and work through that just to make sure people are using it correctly.
Certainly. Yeah, we've got this event calendar that we built in here as well that just lists out all the shows that we do throughout the
Oh,
week.
perfect.
So every morning we do Price Action Live. We do a show called Blueprint, which just shows how to build trading strategies. We do a market commentary on Fridays. And then on every Tuesday, we do office hours to answer any questions that customers have.
Oh,
But I
that's
also want to,
perfect.
I also want to point out that in the bottom right-hand corner, you can just shoot us a message on chat if you're looking to set something up or want to get in touch with us. We are very much in connection with all of our customers as frequently as possible. We've got a great support team. Sometimes I'm even in there answering questions as well if the team needs some backup. But we've done a really good job trying to make sure that we've provided as much resources to make sure that this works for you. And if something isn't, please reach out, because we really need that feedback. It really works well for us.
100%. But Mike, it's been a pleasure, bro. You are a sharp dude. Like I told you, we could keep talking, I'm sure, for a while, but we'll leave it for part 2. And maybe in Tampa, we'll crank out a real one in person. That'd be good. I like the podcast in person. The Zoom thing is cool. But
it's more like a
you connect with
fireside
people.
chat, right?
Exactly.
Yeah.
So I'm looking forward to that. But everybody, links are in the description so you can connect with Mike. I've been tagging you guys in all my Instagram posts. I don't know if you saw from our first little interview we did. So you got
Appreciate that.
me talking. Yeah. So I'll make sure we give the love back, beef up the following on the Instagram for you. I'll make sure the YouTube is linked, and then also the sign up link if people want to give it a shot. Whether you sign up, and then I would even check it out, everybody. He mentioned it, but we didn't deep dive too much. The a la carte. If you are going to be copy trading, it's super easy to add more accounts, as many as you're going to need. I know some of my guys are copy trading 30, 40 accounts. Super easy in the back end. So let us know if you have any questions. You guys know you can reach me on Discord. I'm sure Mike and the team are available as well. So it's good.
Fantastic.
Thank you, Mike. I appreciate it, man.
So appreciate it, man.
Yeah, everybody, thank you guys for staying. We appreciate you staying all the way through. Make sure you're subscribed. We'll see you guys next Saturday.